So you get a listing. It's a very nice house. It can go VA, FHA, USDA, conventional. Cash probably not, because most cash buyers come in low. It's a hot property, right? You accept a contract that's FHA when you had the option to go with one that was conventional or VA. Let me tell you why you don't want to start out doing it like that.
Call or click 404 Eclipse.
The reason you don't want to go FHA first is, let's say you got it listed for 300 and it appraises for 250. FHA buyer, FHA contract, FHA appraisal. It comes in 50,000 below the contract price. That seller, because you did that, because you allowed it to happen that way, that seller, and they're like, no, I want 300. I'm not doing 250. That seller, for the next 5 or 6 months, because some say 5, some say 6. It's actually 6 months from when the contract was written. For the next 5 months, let's say, because it takes about a month to figure out you got hammered with a low appraisal. I've got another video that talks about what to do to avoid a low appraisal. That's another convo. But your seller, just so you know, even though they accepted a contract for 300 FHA and it appraised for 250, if they say no to that, they are still married to that $250,000 appraised value, because it's tied to an FHA case number. And for the next 5 or 6 months, I've already explained that, for the next 5 or 6 months, that seller cannot sell that house to another FHA buyer for more than that appraised price. Not a good idea. So why am I saying that? If it's up to you, go conventional first. Go VA first. Go USDA first. That way, if the appraisal comes in low, you're not married to it. You're not married to that low price. You're not married to that low appraised value. It's really that simple. So here it is. If an FHA appraisal comes in low, your seller is married to that low appraised value for the next 5 or 6 months if that next buyer is going FHA. So avoid it. So don't do it.